In today's episode, I'm going to teach you how to trade the sub-VWAP trap. This is a setup that I really love because when it occurs, it catches a lot of traders by surprise. Shorts feel like they're in the driver's seat. They're all nice, comfy, and cozy. Longs, not really paying attention. And all of a sudden, you get this big breakout. Shorts are covering, longs are jumping in, and next thing you know, we're looking at a parabolic squeeze through the high of day, and that's exactly what happened today. Now, although I like this setup a lot, it doesn't show up all that often. So when we had a good example today, I knew this was the time to make an episode for you guys and use this as a case study. So this is the stock SCNI. It's just a regular stock, and by the way, you could use this VWAP breakout setup even if you're not trading stocks, but you're trading currency pairs or futures or something like that. It's a setup that is really based on this swing between the buyers and the sellers. It's a sentiment shift, and it can create a really violent move. So this one ended up going up 125%. You can see right here that I locked up $14,279.72 of profit on it, which now is putting me up just about $65,000 on the month, and we still have 2 full weeks left. So I'm in a pretty good position here, and one of the things I said is that each day that I'm hitting like a big green P&L like this, I'm going to teach a mini class based around the strategy that I was trading on that day. So thank you guys for tuning in. I hope you're hitting the thumbs up and subscribing to the channel. Let's go ahead and dive into today's class. So I've got the live recording from SCNI, so we'll go over that in a second. But first, we're going to go full screen here. I'm going to back this up, and we're going to talk about the sub-VWAP trap. Okay, so these are the topics we're going to cover. 5 topics, this is the I guess 5 subtopics. We're going to run through them pretty quickly because I want to jam pack this class with content for you guys. So the definition of sub-VWAP trap, the pros and cons of trading it, tools required to trade this strategy. I'm going to share with you my sub-VWAP strategy, sub-VWAP trap strategy, and then I'm going to tell you the skills that you need in order to start trading it on your own. Okay, so first, let's make sure we're all coming here with a level set, even playing field. Let me give you the definition of volume weighted average price, VWAP. This calculates the average price of a stock over the period of the day, and it factors in not just the average price, but the amount of volume that is traded. So the way this calculation works is it takes the high plus the low plus the close, and then divided by 3. And that gives you the average price for one period of time. And then it multiplies that by the volume, and then it divides it by the cumulative volume. So the result is you get a plotted line on your chart that is essentially showing you the equilibrium point of a stock, factoring in the amount of shares that traded. So it shows you the exact average price. In other words, if we know the exact average price and we see that the stock is trading above that price, we can assume that the bulls are in control. And if it's trading below that price, then the bears are in control. I have it plotted as an orange line right here on my charts. In the past, I had it as a dotted line, which was a little easier to see, but right now it's plotted as a solid line. So that orange line that you see right there in the background is the volume weighted average price. So in the case of this stock, it had breaking news right at 7 a.m. and that resulted in the stock squeezing from 450 up to about 850 it was like 15 minutes. It was basically straight up. And it, of course, at that time was trading well above the volume weighted average price, but then we got a swing back down. Some sellers came in, and for the rest of this sort of morning session, we were trading below volume weighted average price. And so it seemed at that time like who was in control? The bears. It wasn't the bulls. This stock was just a little too weak for whatever reason. Not exactly sure why. It can be kind of difficult to know the exact reason why one stock has a great headline and then continues to stay above VWAP all day long and just grind higher and higher and higher. Whereas another one with what is seemingly good news pops up and then flushes and is below VWAP for the rest of the day. But one of the variables is whether or not the company is selling shares. So if the company is selling shares, then that's going to drive the price down. If there's insiders selling shares, that can also drive the price down. So, that's going to vary from company to company based on the circumstances of who's invested in that company, what the balance sheet of that company looks like, so on and so forth. So for whatever reason today, SCNI ended up coming down below VWAP. And then right here is where we got the VWAP trap. So the sub-VWAP trap occurs when the stock is trading below VWAP, and typically the stock needs to have previously squeezed up at least 10%, but now it's declined and it's pulled back below volume weighted average price. And usually we like to see that it's failed previous attempts to break over VWAP. So the reason we like that, I'll show you on the whiteboard. We're going to draw this as the VWAP line here. So that means the price would have squeezed up, and then I'll just keep it in green, come back down, tried to get back above it, pulled back, tried to get back above it, pulled back. And then right here comes back up for one more attempt. And then this is where we break. Sometimes we'll pull back and we'll retest. And then if we hold, we're off to the races, almost always making a new high relative to the previous high a day. So the thing with volume weighted average price is that when we're below it and the price comes up to it, a lot of times it serves as resistance. So price can't break it. Shorts are adding to their position here, and traders who bought the dip down here are taking profit right here. This is reversal trading when you're buying really like way down here and taking profit here. But other shorts are going to be shorting here and maybe not even adding here, but looking for kind of the all-day fade back down, which is not impossible. You could certainly see that kind of move. And we have seen it on a number of stocks over the years where you have the pop and then it can't get back over VWAP and it just fades all day. So it's definitely a strategy for short sellers to short that fade with a stop just above VWAP. So then when the price suddenly breaks VWAP, the momentum suddenly shifts back into the hands of the bulls. Shorts begin covering, bulls are buying, there's an imbalance to the buy side, and a squeeze begins. And that's exactly what we saw today. So the pros of this strategy are fairly straightforward. When it works, the moves can be really big, as we saw here from $5.50 all the way up to $9 a share. That's a fantastic move. We can possibly get parabolic squeezes through new high of day when this works really well. And the entry is fairly easy to understand, even for beginners, which makes this a really appealing strategy. However, there's also some cons. The cons of this strategy is that there's inherent weakness because the stock already broke below VWAP, right? Possible causes could include, as I mentioned earlier, the company selling shares, investors exercising warrants and selling shares, insiders dumping shares, investors dumping shares, selling. Something is creating an imbalance to the sell side. Yes, the stock popped up early, made a nice big squeeze, but now it just feels like there's unrelenting selling, and just driving the price back down. So when that's the case, it's not impossible that you could get a sub-VWAP trap, but if the selling is really strong, it doesn't usually happen, which makes this setup a little bit more rare. Shorts may be more aggressive to try to hold the stock back if they are in heavy, which means if they take a big position while the price is dropping, well, I'll show this on my chart here. So let's say shorts, a short takes a really big position on this stock right in this area. They're shorting the break of VWAP, and then they're adding on the pops, and they're looking for this thing to come all the way back down to 4. So when it starts to pop back up here, they might put a 50,000 share sell order on the ask to try to scare off any buyers. Well, if buyers buy that up, then we get the move higher, but you'll have sellers defending this level. Defending means they're putting their orders up against that level, and they're hoping that they're creating a wall that does not break. But of course, if that wall does break, suddenly you get that flip in sentiment, and that's when things can get pretty crazy. So, this is a setup that has a bit more tug of war. It's a bit more of a battle between longs and shorts. And the other thing that's tricky about this is that breakouts can occur at unusual times, like lunchtime or in the afternoon. It usually is sort of unexpected. And that's kind of part of what makes this setup work so well, is that there's a bit of an element of surprise. Just all of a sudden, boom, this thing is taking off and it's like, whoa, what's going on? And traders are kind of scrambling. Shorts are scrambling to cover, longs are scrambling to get in. And when this setup works really well during regular market hours, the break of VWAP results in a halt up. So it squeezes and halts up because the stock goes up more than 10% in less than 5 minutes. It then is paused for 5 minutes on a volatility trading pause, resumes, and often dips and rips higher, sometimes even into a second halt. And this is where shorts hardly have a chance to unwind the position. And this is a big thing that they talk about, is that now the stock can start just skipping levels. Next thing you know, it's just pushing up 50 cents, $1 a share at a time because there's no liquidity. The interesting thing about the market is that there'll be a tremendous amount of liquidity right around the current trading price. So when we have sort of like, let's see, like this area right here, we have this area right here, there's a lot of liquidity, a lot of volume in this area. But then when it starts to pull away, there won't be as many people lined up to sell in these areas because, well, if this thing breaks these levels, it could make a big move. So we end up having sort of like, if we looked at the distribution of orders, not a lot of orders, not a lot of orders, and then more and more and more and more, and then fewer and fewer and fewer. So as long as the stock stays within this range, it's going to be very congested and it's going to move slowly. But as soon as it breaks out, it'll move fast to the upside or fast to the downside. So we're looking to trade breakouts, especially as momentum traders. And this can be a little tricky because the entry initially is while the stock is still in a bit of a period of consolidation. So the tools required to trade this strategy, I mean, for the most part, it's the same as any other strategy. You need to have some software for finding volatility in real time. So I'm using the day trade dash scanners. As you guys know, you can see them. That's what you're seeing in the background here whenever I'm pulling my charts up. So I've got my scanners right here. And of course, SCNI is sitting on the scan right now, up 41%. But earlier, as it was squeezing higher, it was on this scanner as well. And it was very obvious that this was a stock to pay close attention to. So you need to have your scanners. You're going to need to have charts. Of course, you need to be able to plot where the volume weighted price, average price, the VWAP is on the actual chart. And you're going to need a platform that's going to give you access to level 2 data. Level 2 data and watching the level 2 is actually what gave me indication to take my first trade for the break of VWAP or the sub-VWAP trap on SCNI, and you'll see that in a second. Having hotkeys, even simple hotkeys, just to buy and sell quickly, it's going to make it a little bit easier. So for me, I have a hotkey that is Shift. So I press Shift, and then I press the number 1 right here. Shift plus 1 right here, and that's going to send a buy order to buy at the ask plus 15 cents. It gives an offset. So as something is moving up quickly, I can jump in. Now you can script that for as many shares as you're comfortable with, depending on what your risk tolerance is. A lot of people will set it for like 1,000, and then shift 2 is 2,000, 3 is 3,000, 4 is 4,000, 5 is 5,000, etc. You go all the way up to 10,000 if you want, whatever you want. And then I have another button that is Control Z, and Control Z is sell bid minus 15 cents, and it's for full position. So selling my full position at the bid minus 15 cents. Then I have another key that's Control K. The K button's kind of in this area, and Control L, and this is for selling at the ask. So selling the position instead of the bid, it's just ask price to sell into strength. So having even just those 4 simple hotkeys plus Control Q up here to cancel any open orders, that's going to get you the ability to move in and out of these trades pretty quickly, which is what you're going to want when you've got a fast moving stock. And of course, as always, it's great to have software that you can use to review your analytics. And I use TraderView for that. And I don't have any affiliate relationship with them. So use them if you want, or don't use them if you don't want. It's up to you. Okay, so now let's talk about my sub-VWAP trap strategy. So step 1 is finding a stock that's volatile. All right, so step 1, find the stock on the scanner. Oops. It's okay. We'll just go like this. So step 1, find the stock on the scanner. Step 2 is to figure out what the news catalyst is. Now, a news catalyst is actually important for the VWAP, sub-VWAP trap because it gives the reason for the stock to change from being bearish to bullish. So this did have news out this morning. We had a headline here, which was great. So we had a catalyst that gave us step 2. Step 3, I perform my technical analysis, which is based on reading candlestick charts. So if you haven't watched my full-length episode on how to read candlestick charts from zero, make sure you check that out. I'll put a link to that at the end of this episode. So when I'm talking about technical analysis, I check the following timeframes. You'll see the 10-second, the 1 minute, the 5 minute, and the daily chart right down here. So I have 4 timeframes, all for the same stock. I start with the largest time frame first, and I look to see if there's any nearby resistance. And in fact, we did have resistance right here at the 200 moving average, but it was up around like 850. So it was a resistance level that came into play, but it wasn't an issue immediately. We also had a day back here where the stock had 30 million shares of volume popped up and sold off all day long. So that made me a little bit nervous on this, but it was able to show a good amount of strength. But it's not totally surprising that today sort of is matching that day, both high volume red days, as we're getting further into the trading session. Then from there, I look at the 5-minute chart. And what the 5-minute chart showed me on SCNI was that we had made this initial move up right here, which I knew because I had already traded that. And then we got this pullback and we were consolidating under VWAP. Now, at the time, I didn't see anything really more to look at, so I didn't jump into focusing on the 1-minute chart or the 10-second chart. I would really only do that if I was at a point where I was actually considering taking the trade. But I wasn't considering taking a trade at the moment that, I sort of first was looking at this. But someone in the chat room, Alexandra, she mentioned, take a look at SNCI for a dip trade. And I pulled it up. And when I first pulled it up, I think it was probably around this area here. And I said, well, I don't know. It's a little tricky. It has pulled back a good bit. It's definitely below VWAP. I don't know. And my thinking at that time was that there were a couple of other stocks that were moving and that were obvious. You can see we have other stocks here that are up more than SCNI. So I was sort of focusing on those, and I got some trades on a couple of them: CRKN, DATS, IVP. So, and by the way, IVP was straight off the watch list from yesterday. So that was a nice trade. I didn't make as much on it as I guess I could have. But nonetheless, I had a couple trades here. But then as we started getting a little closer to the open, I started recognizing that all of the leaders were pulling back and they didn't really look very good. And I kind of flipped back over to SCNI, which was on a side chart, and it was sort of right in this area right here. And this is what I noticed. It's basing. When I say it's basing, I mean it's holding support. It's holding this low. So in this area, we were kind of making new lows, making new lows. And then we kind of stopped making new lows. And in fact, we made a little pop up. And so that little teeny pop up there got me kind of thinking that we're starting to base out. We're still below volume weighted average price, but we're starting to base out. So what I decided to do here was to look for an entry. So step 4, once I've done my technical analysis and I begin to see a setup, I look for an entry. And this is where I'm pulling up my level 2. So we're going to go ahead and jump into the screen here. So this is going to show you my actual trading platform right here. This is from this morning. And so I have SCNI up on this level 2 window. It's up 40% here, about 4.2 million shares of volume. And right at this moment, there's a spread of 14 cents, 560 by 574, 575. But right here, right in that moment, the bid tightened up. So the bid tightened up there a little bit, and now there's a little green on the tape. So at this point, I pull up the chart, and I'm starting to think we might have something to work with. So what I end up doing is I type my order for 1,000 shares, and the price is 585. And I'm kind of just looking at this level here, looking at the 1-minute chart. 10-second chart's not showing a lot because it's a little bit more thinly traded, but I'm just watching the time and sales. And watch right there, when I saw that burst of order go through, I said, I'm jumping in. That's it. I'm jumping in right here. So now I'm in at 85. My order's right there. So I'm in at 85, and now you've got 75 by 93. So all of a sudden, we're starting to kind of perk up. Now, and when we look at the 5-minute chart and the 1-minute chart, you can see that the sentiment is starting to shift a little bit, right? All of a sudden, we have this 5-minute candle, right? And the 1 minute starting to push up here towards 6. Now, the second I got in, the way I trade, I follow a philosophy of breakout or bailout, which means if I time my entries correctly, I should have pretty much immediate resolution. If I'm correct at the entry point, it'll work right away. And if I get in and it kind of stalls and nothing happens for a few minutes, that's when I'm thinking, I might have timed this wrong. Maybe I've got the right idea, but it's not going to work. And the biggest concern that I had with this stock at the time was that it was not, I was concerned it was not quite obvious enough. So if we look at the scans, it was up 41% here, but it was in, let's see, 1, 2, 3, 4, 5, 6th place. It was in 6th place. Oh, you can't see because of my video. Let me just hide that video. So it's in 6th place here in terms of its position on the scan. I usually like to trade a stock that's in like 1st or 2nd place, but I'd already traded DATS, got some profit on it. These ones were a little too cheap. DJT I didn't want to trade because I knew it'd be too risky. Mira was too cheap. And so this kind of left me with this was the most obvious one for me, but I didn't know if other people would feel that way. So when I first jump in, it pops up to 93, but there's a little bit of a moment of truth here. And so I ended up taking a little profit off the table. And then when it goes up to 6, it goes up to 606, 610, and it's now going to give us that kind of push higher. And this is something I noticed right here, a 20,000 share buyer at 615. So see that buyer right there at 615? I had just taken the last off the table at $6.07 before that buyer came up. But on the one hand, I looked at that buyer and I thought, this is bullish. Someone's putting out a buy order to buy 21,000 shares. But on the other hand, I thought, maybe this is the trap. Maybe this is not going to be a sub-VWAP trap. Maybe this is going to be a bull trap. And they're putting that order there to try to get bullish traders like me to buy, only for them to dump it. So I was a little bit unsure about what was going to happen here. And we were coming up to the volume weight average price, which was right around 650. So we end up, that buyer is right there at 15. You see that buyer on the level 2 there at 15? So we end up pushing higher. I end up moving an order up to 659. And I'm starting to get kind of situated. Now, in hindsight, I had a great entry on this, and I sold because, well, essentially I took my base hit. Now I'm just still watching the level 2 here. Okay, so let me just comment for 1 second on base hit trading. I'm a big advocate of taking base hits. And here's the reason. If you get in a trade and it goes up 10 cents, 15 cents, if you pay yourself, then you've got a winner locked up. And the thing is, it's a lot easier to predict when a stock will go up 10, 15 cents than 50 cents to $1 a share. So if every time it goes up 10, 15 cents, you take profit, you're going to have much higher accuracy than traders who don't take anything off the table until they're up at least 50 cents a share. Now, traders who wait till they're up 50 cents a share will have bigger average winners, but lower accuracy. Lower accuracy hurts self-confidence, at least for me. I think it does for other traders as well. So I end up being in the sort of mindset of taking base hits, locking them up, and then walking away. Now, here's the problem. That buy order got pulled. It didn't fill. You see the order flow here? No one filled 20,000 shares to the sell side. That buy order just disappeared. So that's when I started getting a little bit, I was a little skeptical about what was going on there. Little shady, something was a little funny. But, you know, it is kind of holding up and it's moving towards VWAP. So I'm like, you know, we're moving in the right direction. So it pushes up here to 35. It goes up to 49. I take a trade right up here. And now I'm trying to take that break through the high. So now we've got 680, 698. And I'm looking for that squeeze up to 7. So now you see all of a sudden I've scaled into a bigger position, 10,000 shares, and I'm looking for that squeeze on this up through what, well, at that time, my target was a retest of the high a day. So if we look at the 1 minute right here, I was looking for a push straight up to $8. But this is what ended up happening. It squeezed up to about 720 and then it drops down. Then it comes back up to 720 and it drops down. Comes back up to 720 and drops down. So right here at 720, we had clear resistance. But we were holding support more or less at volume weighted average price. And I think, again, so I noticed that this stock has warrants at $6.50 a share. And so that made me start to wonder if we were dealing with an issue here with insiders selling these, or with people selling these warrants. So I'm not sure. We may see news later in the day to that effect. We may not, but nonetheless, so I end up taking that trade. I'm in nice shape here, but it ends up dropping back down. So I stop out, it pulls back for a little bit, and then we come back up. So we retest VWAP, and then we're looking for that curl back up. And through this area, really, I just kept trading it and buying dips and taking breakouts. But look right here, we just had that 20,000 share buyer back again, right? So back again there at 675. And this is why I was just like, is this thing going to work? So now we come up here to $7. I'm adding for the break of 7, and I'm like, let's go. Finally, we get the break of 7. So now once again, I'm back in with 10,000 shares again, and we've got 685 on as my entry. We're showing 709 by 711. And this is what I finally wanted. I was like, yes, let's pull away here. Let's get that squeeze up to 758 or higher. But you know what happened? Once again, it kind of stalled out. It ends up pulling back. So then when it finally comes back up at the open, naturally, I was a little cautious about it. It was feeling like not trustworthy, but then finally it ends up ripping. And so you can see here, I just end up taking small trades as it pushes higher. But this is a stock that there was definitely some tug of war going on with it. I mean, like, it was moving higher and I got some nice trades in here and worked my way up to, 14,000 on the day. But it did, even in spite of the break of VWAP, it just had this sort of inherent weakness in it. And actually, here, let's back this up. So let's watch this. So right here, SNCI is squeezing up. There's 84 on the offer. So I end up taking some profit, and then watch this flush. I think these flushes were happening because there was someone inside, I don't know, just pressing the sell button. Watch this. Whoa, $1 a share drop. $1 a share in one candle. Like, what is going on? So that ended up being kind of the problem. And I think, again, this highlights some of the inherent risks with trading a stock that has previously broken below VWAP. It just shows that clearly there's a bit of a struggle going on. You end up on the 1 minute having that pattern that I often call sort of the devil horns right there, those two topping tails, a nasty rejection, and then further selling. So I am concerned that we may see some news out later today of exercising warrants. The thing is, they'll put out the news that they exercise during the day, and then that goes back and explains the price action. But I could be wrong. It could just be, I don't know, something else that's causing the selling. I don't know for sure, but it's just, there's obviously a lot of selling on this one. So, I think for me, at the end of the day, I've got to review my metrics. I've got to analyze them carefully. And to get a better understanding of the skills you need to trade this strategy, essentially, it's not a lot different from trading in general. The biggest thing is you need the discipline to cut your losses quickly when you're trading something that's against the trend. And when you're trading something that is against VWAP, below VWAP, that's got more risk. And when you're trading something that's showing you some of these big jackknife candles, these big reversals, that can result in some big losses. So you got to be a little bit careful. Not the cleanest stock that I've ever traded, but locking up some nice profit today, and I'm going to try to do it again tomorrow. And hey, those of you guys that want to join me, I will put a link right here. I'll pin it to the top of the description and in the comments for a 2-week trial, so you can trade over my shoulder for the next 2 weeks. You can use this software, the charts, the scanners. You'll have access to the chat room, my broadcast, and our news feed, and you can see what it's like to be a member of the Warrior Trading community. We like to think that we are the #1 home for momentum traders. So come on and join us. And thank you as always for tuning in. I hope you hit that thumbs up. I want to remind you, as always, in case I hadn't already said it, trading is risky. My results are not typical, and there's no guarantee you'll find success. Whether you trade with me or you learn on your own. So please manage your risk, take it slow, and I'll see you for the next episode here tomorrow. Hopefully we have another really solid day tomorrow morning. All right, I'll see you guys tomorrow.